Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of Tide, Oliver Prill. Great to have you with us.
Thank you for having me.
Okay, so before we get cracking, we're going to learn a little bit more about Tide. Okay, so Tide, it's a business-focused neobank targeting small and medium-sized businesses. Is that just about the size?
Yeah, that's right. We are a challenger. We call ourselves a business financial platform internally. So we serve over 400,000 UK SMEs, so 7% of the entire market. And we take care of their business and finance, making that simple and saving people time.
And why would a business open an account with Tide rather than, say, Starling Bank or Revolut or one of the incumbent banks?
Yeah, so you're completely right. Basically, the big competitors are actually the established banks. There are two meaningful fintechs in the sort of SME space in the UK, Starling and ourselves. However, we don't really take customers from Starling, nor do they take from us. It's really about the big banks, and there it's really about the digital proposition. So we make everything work well together, so things can go extremely fast, right? I mean, so you can you can write an invoice, you can factor the invoice, you can chase the invoice. All of that gets attached to your payment receipt and pushed into your accounting system. We make all of these processes work very seamlessly together, and that's how we save people time, and that's very different to the way, say, a big bank would approach the whole problem.
And what's the mission here overall?
And the whole mission has been from Tide always to save time and money, so micro businesses can get on with what they love to do, which is to run their business and hopefully have a bit of spare time rather than spending Sunday afternoon doing expenses.
And I understand, although I'm not in London right now, as you can see, but that in London you can't take a tube ride right now without seeing giant ads for Tide, which are competing for commuters' attention with many other fintechs, which are also got their ads on the tube. So, in this age when everything is going digital, do you really need to have an old-fashioned poster campaign? And part of that question is, do you see it paying off in terms of the costs of acquiring customers via that route?
Yeah, Elliot, that's exactly how we look at it. It's about paying off. So basically, we optimize against CPA, and we're really quite channel agnostic, right? So whatever works. What we found over the years is actually that a mix is the right thing, right? So we're maxing out the digital side. There's the paid digital, but also the unpaid, so SEO stuff. But you also, out of home or TV or radio, if bought in at the right prices, can be very effective. So we're very good at measuring that. But in the end, we care about the blended CPA, and we make sure we don't exceed it.
Okay, so we've heard a bit about Tide. Let's now get to know Oliver a little better. So, Oliver, you're a Hamburger originally, from the city of Hamburg. Tell me a bit more about your formative years, your early life there in Germany, or and wherever else you
Yeah. So I'm
winded up.
older vintage, right? So probably this could be a long conversation. But essentially, born in Hamburg, family German, but the family is all over the world, from Canada to the United States to UK. Spent half my life in the UK. Went to university here, did my doctorate in Oxford. Started my career at McKinsey, then various stints at Direct Line, RBS, built and sold C&A Bank in Germany, now Bank 11. Then had a stint at Credit Tech before taking on Tide. So really, it's been always in financial services and a little bit more on the rebellious end. So always on the innovative, market changing part of the financial services industry.
And you mentioned your career at, I guess, what some might describe as the kind of CEO factory that is McKinsey, and you've been in financial services kind of all the time. You mentioned Direct Line. Of all the steps you made along the way, which experience would you say had the biggest impact on you?
I think a whole set of experiences forms you, right? So I don't think there's a single one to call out. I mean, to me, what attracted me really about Tide and what I'd learned really was SMEs were really badly served by the incumbent players. No one had really found the formula. It's very difficult because of the diversity of the sector to do that in a non-digital way. And Tide does that with the right proposition, but also with the right value set. So for us, member first, really being very much member focused, rather than short-term commercial gain focused. I think is the winning formula for that. So really, that's what I took away, and that's why I'm so excited about Tide.
We've been hearing that SMEs are underserved for forever. When are they going to be well served?
Well, so one of the things in the UK, all the challengers together now make up 35% of the market, right? We do about 7. Starling has another 7, and then there's a very long tail of traditional and digital challengers. So the market is in the UK very rapidly changing. The continent is just following. So I think things are getting a lot better. They're still not 100% there where they need to be. As far as Tide is concerned, we always say we're only 20% where our mission wants to be. So we're still going to be developing a lot and making things even better. But things have massively improved over the last 5 years. And, we expect that trend to continue and to accelerate.
Okay, so 80% to go for you to
Absolutely.
say job done.
Yeah.
But Oliver, look, in the world of fintech and startups in general, founders are often venerated for their genius and their determination for building these tech businesses and taking these risks. What are the pros and cons of having a non-founding CEO? Because you're not a founder of Tide.
Yeah, that's right. So I took over from George Beavis when Tide was very, very small. And he had the vision that, he was one that is very good at starting companies. And, really, I see my sweet spot at scaling companies. So I'm not really the person for the kitchen table. I'm more the person to say, once the whole thing works, let's really get real scale in. And so for me, that was a really great transition. I think, Elliott, there is probably not one formula. I think there are certain founders that do go for the ride, all the way up. There are others where, they say, look, I really enjoyed the starting up bits. I think there is no right or wrong. What is very important, I think, for a founder is if they feel they've really gotten the baby running, right? If that's the right analogy, but they feel that they're not the right people to take it forward, then to step aside and really stay part of the board and stay part of that journey. I think that's a completely legitimate thing to do. It's not for every founder, but, there are, it is a different skill set to really rapidly scale a business to starting out a business, and the transition isn't for everyone.
Okay, so look, a key part of this interview is to get your take on the future of finance, but first we are going to take a quick break, after which we're going to continue our conversation with Tide CEO Oliver Prill. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Oliver, let's now talk about the future of finance. So, look, so far this year, we've seen inflation rocket, we've seen interest rates rise, we've seen market volatility surge, and Russia invade Ukraine. Which of these worries you and perhaps other banking CEOs the most?
So first of all, we're really glad that the pandemic is really behind us. That was really the biggest thing that affected our sector. And so in the UK at the moment, the market, is actually running quite well. We've returned to normal. There are really very healthy business numbers coming through. Of all the, we clearly live in very uncertain times. We still have to see how sticky inflation and so on is. How public finances more generally go through, how the war in the Ukraine pans out. But so far, we haven't really seen that impact. And I would say, from everything we can see in the next couple of quarters, the benefit, the impact on the small business community will not be as dramatic as some commentators suggest.
And I see that Tide was offering support to Tide staff and families in Ukraine. Did you have a big team there, and what impact do you think this might have on where startups source their software engineers and IT teams? Could we perhaps see more reshoring?
Yeah. So we are 850 people, and we had 5 in Ukraine. So it was a very small number of people who, we offered to get out, while it was still possible. Some of them, took the decision to stay, and that's their good right, right? And we're supporting them in any way we can. And clearly, Tide took a very unusual step, because usually we stay non-political. That we are clearly very much supporting Ukraine and free society. In terms of, there will be a post, a war Ukraine. There will be a rebuilding job, and as part of that, I think, in terms of your question about development and so on, I think that's the time then for the fintech community to rally and probably help to do its contribution to rebuilding Ukraine by offering, to do more development rather than less development in the country. But that's for something in the future. For now, we very much support the efforts there to help defend all our freedoms.
Okay, and speaking of staff, we all know that there's also a war for talent going on in the fintech ecosystem. How is Tide handling it? Are you paying your employees more? Are you giving them more flexible working, maybe more holidays? And what do you think maybe can be done at a national level, at a government level, in order to deal with this?
Yeah, so we've been affected like everyone else. If we really look at very much at the numbers, it's mainly product engineering, and there it's not only there's a degree of attrition, but actually our biggest challenge is hiring, because we're growing at such an enormous pace. So that's really the lay of the land at Tide. We've always been very Tidian oriented, so we've always tried to have great working conditions, etc. So what have we done recently? We really said, look, out of the pandemic, we're not going to insist coming back to the office. So we have a very flexible working, we actually call it WOO, working outside the office policy, where with a couple of restrictions, you can essentially choose what you want to do. So basically, we're outcome rather than input driven in terms of your working, your working environment. We clearly reviewed pay, and we continue to do that. We do believe in the end we also want to attract people that want to work for a purpose. So we work very hard on getting the right purpose. Tide is really there to help SMEs, small business owners succeed. That is a mission that appeals to many people, and to have that purpose. So we are working on all these fronts. We're doing, I think, reasonably well given the market environment, but it's a tough environment at the moment.
Right, and of course we've seen many fintech IPOs either having initial public offerings or going public via SPACs over the last couple of years. We've seen a massive drop in valuations of many of these companies. What do you make of that? And given the fall in valuations, do you expect legacy banks and perhaps deep-pocketed fintechs to take advantage and start maybe buying up some of these fintechs?
Yeah, so I think the drop in valuations, there are many reasons for that. Some of them alpha, and some are beta, right? So some of it depend on the company itself, right? Others maybe the market environment. On the general thing, I think there are a couple of actors out there on the VC side, sort of new VCs that have sort of, with actually quite horrific terms, try to drive very high valuations. Whether that is actually a smart thing and something good for the industry, I think we stand to see, but I think that's one thing one always remembers in the private market. A lot of the structuring and some of the actors that had take a very sort of esoteric investment approach do drive some of the stuff, and we are seeing, I think, what is in part actually healthy normalizations. This is not so much on the people that have gone public, but just on valuations really starting to reflect in the private sector what in the market, in the public sector, these companies should be worth. So I think in general that is a healthy bit. I think it also allows operating teams like myself, and I'm sure this applies to every other company, to really focus on the fundamentals. We should be there to really build a very solid business. It's about business fundamentals, so ARR, having great unit economics, having a path to profitability, all of these things, rather than chasing structural term sheets and ex-investors who just write very large checks and drive through various ways of structuring high valuations. I think that is not a very healthy part of the market. And so in part, I think as long as it stays within some correction, it's actually a good thing that happens rather than a bad thing.
And so do you expect, more mergers and acquisitions to happen, perhaps different
Yeah, I think so.
neobanks
That's a
getting
good one,
together?
Elliot. So the banks, you always have to remember the banks are very poorly valued, right? So certainly, I mean, there are a few like JP Morgan Chase and so on that actually has the pockets, but still for many of the other banks, actually buying a unicorn plus a fintech, it would be a really major investment. And whether that is really coming, I'm not so sure. I think what we will see on the M&A side much more is the financial and the non-financial sector merging. So we saw, Apple buying, a UK credit reference agency sort of startup. It's these sorts of plays that I think are going to be much more likely, where maybe big tech is starting to realize that building all of these things in-house is not the wisest thing or the easiest thing. And I think so that you will see some of these things, or fintechs buying fintechs. I think we saw the thing with Square, or, what they call themselves now, and then Afterpay, right? So I think these sorts of things are more likely than banks buying fintechs at scale. I think banks buying fintechs will be more at the very small end, but the big M&A, I think, will come from other sources.
Okay, and usually incumbent banks work with retail and corporate customers, but in the fintech world, we've seen kind of more specialization. Some neobanks focusing on consumers, some focusing on companies. Revolut is a kind of exception, I guess, in that it services both. Do you think we're going to be seeing more rebundling, if you like, where fintechs that were kind of focused on one niche to begin with start kind of moving out and covering other niches, to offer more financial services to different audiences?
Yeah, I think here consumer and business is very, very, very different, right? On the consumer, which is not where Tide is, but a lot of this connectivity runs into real life events, right? I have my Google Maps and I can see where to pay and where to buy things, right? And so I think on the consumer side, we'll see more and more integration of the consumer financial services, right, in real life sort of events. In businesses, which is the sector that Tide is in, it's much more around connecting different financial finance and admin services. I write my invoice, I factor my invoice, I chase my invoice, right? So it's really around the finance and admin bits. And this is actually what Tide is all about, right? Making these things work. So I think we will see this reconnecting. What is always very important to understand, and often people don't get this, is product verticals. So just doing it on your own is very hard when you're in the micro segment, right? Because the unit economics don't work. Your customer acquisition costs are too high for the limited revenue potential you have. And so building a product silo strategy, either in consumer or on micro business, which we are in, is very, very hard, if not impossible, on a unit economics basis. So there's always a drive also commercially to drive, to connect up. So the customer side will very much come that these services are connected to real life events in the consumer, to other business financial services in business. That's the demand side. And on the supply side, so the entities, it's really about unit economics, that you can't really do that on a solo product basis. So absolutely, we'll see a lot more of this.
And you yourself, you've been an outspoken critic, I think, of aspects of Britain's business banking sector, arguing that open banking reforms risked being curbed by big British banks. What exactly is the problem?
Yeah, so by the way, we're not necessarily a critic. I think it's just about what we are trying to encourage is that the UK, now having left the EU, and you can think of it whatever you want, but we have now left, we should really take this as an opportunity to move very rapidly forward in regulatory financial innovation. One of them is open banking. Well, open banking, the UK was a leader in it, but we've really lost it a little bit, right? It's just become very bureaucratic. It's become very entangled in, jurisdiction decisions between the different regulators and so on. And there's really been very little innovation. We think this is the time where, especially in open banking, we can actually become much more commercial on the open banking side, and offer banks actually to view open banking as a business opportunity rather than a regulatory compliance exercise. So this is really what we've been driving. We think there is a market where in the end, if you consume someone else's data, it's okay to pay for it, right? We would pay for it. We would mainly be consuming. You get better APIs, you get better service, rather than this sort of extremely regulatory driven, open banking approach that has the hallmarks of PSD2. And in part is actually the reason why PSD2 has not been as successful in continental Europe as it has been, as open banking has been in the UK.
Now, just briefly, if you can, last year you raised $100 million at a reported valuation of $650 million, and you said that some of that money was to help Tide expand overseas. Briefly, if you can, With the possible exception of enormous markets like the US, is it possible for a fintech to succeed in just one market, or do you have to expand internationally eventually?
I think if you want to really get things at scale, unfortunately, unless you're in the US or India and so on, and some are very defined market, you have to go international, right? And so UK is a small island nation, and therefore, we need to go abroad. We have 7%. Where will we end? 10, 15%. But in our business, you can't have 50, 60% market share. That's just impossible, right? So, we will go international. We started with India. We will go into other geographies, and in the end, we want to be in the most attractive SME markets around the world ultimately. And so we're starting that journey, but that's the very beginning of the journey.
Okay, so look, time now for our rapid fire round of questions. Are you ready?
Absolutely.
Okay, so we've got 90 seconds to get through these. 1 or 2 word answers if you can. The most successful fintechs we know are very well funded, many of them, but are losing money hand over fist still. Is this to be expected or something we should worry about?
Expected.
What fintech segment besides yours has the biggest potential over the next 5 years?
Very good question. I would say actually it's SME banking, but that's the segment I'm in.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
I'll pass on that one. I don't think I have many pains.
Do you think we're at the beginning, middle, or end of the fintech wave?
Oh, absolute beginning.
Do you have a metaverse strategy?
No, I think the metaverse is esoteric. It will come.
Do you think the EU and US regulations have kept pace with developments and behaviours we're seeing in the financial industry?
No.
How would you describe NFTs? A scam, an interesting concept, or part of our future that we mustn't miss out on?
I wouldn't call it a scam. I don't think it's going to go anywhere.
Have you ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, 1 being the lowest, 10 the highest, how would you rate the chances that in the next 10 years, one of these following things will happen? One of the neobanks will be as profitable as a top-tier legacy bank?
9.
CBDCs become a mainstream reality in the US or EU as well as China?
7.
You'll be able to open a crypto account at a top-tier bank in parallel or instead of a fiat account?
9.
SWIFT will still be the main tool used for transferring money around the world?
2.
A new card or non-card-based rival will emerge to challenge Visa, Mastercard, Amex, etc.
7.
And then we'll see a top-tier bank or insurer bought by a fintech.
9.
Okay. I'm afraid we are out of time for that round and for this discussion. So I really want to just thank you, Tide CEO Oliver Prill, for taking the time to speak to me today.
Thank you for having me.
And we will be back again next week for those that are watching with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. See you next time. Bye-bye.